Brian, you got an article out on the site talking about Goldman Sachs making a call, saying that there is a case for a V-shaped recovery after this pandemic is behind us, making the argument that we could actually see multi-million job gains when we come back. I mean, on the same day that we're hearing 6.6 million Americans applied for first-time unemployment benefits. Break that down for us.
Yeah, well, obviously, as we know, those jobless claims numbers are not very good and probably don't make a very clear argument for a V-shaped recovery. But Goldman Sachs had a note yesterday saying that if this event that we're going through right now is in some way similar to the 1981-1982 recession, we could see a rebound. So keep in mind, 1981-1982 was the Volcker recession. That was when Fed Chairman Paul Volcker dramatically raised interest rates to try to stem inflation, which at the time was rising to the tune of nearly 10%. We saw millions of people lose their jobs during that recession as well. But it was very akin to a temporary shutdown, as Goldman points out, very similar to the way that the government is telling businesses to shut down right now. And after the 1981-1982 recession, we did end up seeing a multi-million job rebound in 1983 and 1984. So Goldman Sachs saying if it is similar to that, maybe we do see a similar bounce here with the coronavirus once we do ultimately at some point get the economy back up again. So Goldman saying there is a silver lining to all of these negative data that we're receiving, but we still need to rely on the health response to be able to tell us whether or not we can actually get that sharp rebound.
And Brian, real quick here, break down for us what the Fed did this morning, unveiling the details of that $2.3 trillion package.
Yeah, $2.3 trillion, which the Federal Reserve is going to be using to expand its existing facilities on primary and secondary corporate credit investment grade. They did slightly expand the scope of those facilities, not only by size, but also to include some collateralized loan obligations, which would cover some high yield stuff. And then they also announced a little bit more detail on the Main Street lending facility. It will provide 4-year loans of a minimum of $1 million to businesses that are slightly larger than those that are being targeted in that Paycheck Protection Program. The Federal Reserve saying it'll backstop those loans by having the banks hold on to 5%, but the Fed will take credit protection for the other 95% of loans to basically tell lenders, hey, go out there and try to make sure you provide this credit to those businesses that really need it.
All right. And all that news, of course, sparking the rally we're seeing right now on Wall Street. Brian Cheung, thank you.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.